Right, but let's move on to Ceat. The company expects only a 5% revenue growth for the domestic tyre industry in FY16 as against 2 to 3% in FY15. So we could expect some pickup. That's the word which came in from the Ceat analyst meet, which was held recently. Farah Bukwala joins us for more on that. Farah.
Well, thanks for that, Reema. So, as you've already shared the first point on the revenue growth for the domestic industry, let me go on to the other points then. Ceat continues to focus on the high-margin two-wheeler and passenger vehicle segments for which it is expanding capacities. So, in its passenger vehicle segment, it is expanding capacity at its plant in Halol. This expanded capacity will be commissioned over the next 2 months, and the company is spending about 650 crore rupees for the same. Capacity at this plant will be increased by 120 tons per day. Now, in its two-wheeler capacity is being increased through the setting up of its plant at Butibori in Nagpur. Construction on this plant has begun, and it will be commissioned by the fourth quarter of FY16. The plant is being set up at a cost of 420 crore rupees, and it will manufacture 1.2 million tires annually. Going ahead, the company also expects the share of the OEM segment to increase its overall revenues, and it has already begun supplying to many of the new and upcoming models for several OEM players. Radialization, Ceat expects radialization levels in truck tires to increase to 60% in the next 5 years from the 30% seen in FY15. Coming to competitive pressures, China continues to be a big bone of contention. The company expects a degrowth in the high-margin exports for FY16, mainly due to increasing competition from Chinese players, and in the replacement market as well, cheap Chinese imports continue to remain a severe threat. The company is also facing some sort of headwinds in Bangladesh, where it is setting up a joint venture for which it has already invested about 80 crore rupees. The company is facing litigations due to, as far as the acquired land goes, and expects some clarity to come in over the next 2 months. This would be crucial given that the company has a target of achieving 30 to 40% share in Bangladesh over the next 5 years. With that, it's back to you.
All right, thanks a lot for joining in, Farah. Cheap Chinese imports remain a threat in the replacement markets to see. That's stock trading at the low point of the day. However, we'll watch out.